Good day, ladies and gentlemen. Welcome to the show. Listen, I'm glad to have you guys here on this Monday, the 8th of March, 2021. You know, for silver investors out there, it's been a long, hard slog, I'm going to call it. Silver and gold right now are probably cheaper than they've ever been, priced in what you can purchase with them. And we got this newcomer coming to town, cryptocurrency. I say newcomer because it just started in 2009. It was basically worthless, when it first started. But, the people who started it, whoever started it, they got 1 million of them. And probably still have 1 million. If you can just imagine that. They knew it wasn't going to be worthless when they were hoarding them before anybody even knew what they were. But what about the guy who bought a pizza with 7,000, I think it was, Bitcoin? He thought he got a real good deal, for one pizza. I think went to Domino's or whatever, But this is the way it's been going. It's been on an upward curve ever since its inception. And there's no reason to believe that anything's going to shake it out of the tree. Now, well, it's becoming more of a mainstay all of the time and more of a way as a hedge against the US dollar and the demise of the US dollar, which is increasing all the time. They just printed $1.9 trillion, if you can imagine that. And, the Treasury has $1.6 billion more that they're holding from that, I guess, from that first stimulus package that they're planning on releasing. And we got tremendous amounts of liquidity flowing into the upper echelons of the financial system. Hasn't really made its way into, it's going to. And, the big time investors out there that are investing in cryptocurrencies, they can see all this coming before you guys can see this coming. And I've been telling you guys for quite a while now to HODL, because people who HODL are going to make out the best. And I know it can be kind of hard, because a lot of us out there, we're not made of money. We're the people who are on the lower end of the feeding chain as far as the money pool is concerned. And when Bitcoin starts to move up to $50,000, I mean, some of us out there in my audience out there, some of you guys may have purchased a half a Bitcoin or a whole Bitcoin back when it was $3,000 or $4,000. And it was a lot of money for you back then to plunk that money down and get it. But now you're sitting there holding it and you're eyeing that 50,000 and you're saying to yourself, oh my gosh, what if it falls? It's a lot of money for me, you're saying to yourself. I'm going to tell you guys what. Big stuff's coming. Really big stuff's coming. Let's take a look. Let's open up the charts right here and take well, where's my charts? Just give me a second here. Okay, we're going to open up the charts right here and take a look. Goldman Sachs sees huge institutional demand for Bitcoin right now. And 76% of the clients are saying that the Bitcoin price could reach $100,000 this year. That means that your digital asset will double from what it is right now. Double your money by the end of the year. There's 3 asset classes that are going to keep up with inflation. Your wages are not going to keep up with inflation. But these asset classes, if you're invested in them, they're going to hold your purchasing power. And in fact, some of these asset classes, like I'm thinking to myself silver, and I'm thinking to myself possibly Bitcoin, are maybe going to exceed the rate of inflation even. And so this is the place you want to be. Now, your friends and your neighbors, maybe they don't have any of these asset classes. At a certain point, they're probably going to want to buy in. But they're going to be paying the extremely high prices. Now, if you remember back maybe a couple years ago, back when Bitcoin was like $2,500 or whatever, and maybe you bought in, and your friends and neighbors didn't. Now your friends or neighbors see Bitcoin at 50,000, and they're thinking to themselves, "Hey, it's too high. I ain't buying any of that." It's going to go down. It's a tulip mania. It's a bubble or whatever. Well, and so they're holding off buying it now. They will buy in at a certain point, but they might buy in when Bitcoin's 500,000, 10 times what it is now. So the earlier you get in, before the dollar goes to toast, and that's where the dollar's headed ultimately, it's going to go to zero. And I know that's hard to comprehend. And what is even harder to comprehend is the amount of disruption that that's going to cause. Tremendous disruption. I can't begin to describe the disruption, and basically it's going to make the whole world look like Venezuela. Power outages in certain areas, civil unrest in certain areas, and you don't know if you're in one of these areas or you're not, and so you might have to move out of one of these areas, get out of Dodge if things get too bad, but your Bitcoin will go with you. All the Bitcoin is basically is the private key. You just got to take your private key with you. It can just be on a piece of paper, and it might be really crazy times coming up in 2022 and 2023 when this hyperinflationary scenario really gets going. And I don't see any way out now because there's no politicians out there who have the chutzpah to stand up and say, hey, we are going to bite the bullet and we are going to let the cards fall where they may and let all these zombie banks, let all these zombie corporations, let all these big banking institutions go down. None of them are going to do that. It's political suicide. What is in favor with the politicians is whenever the going gets tough, just print more money. And this is the way it's going to continue. It's not going to change. And you're going to see possibly we will reach this target at the end of this year of $100,000. It wouldn't surprise me a bit. Are you that surprised right now that Bitcoin is at 50,000? Maybe you're a little bit shocked, but you won't be any more shocked when Bitcoin hits 100,000 than it is now at 50,000. It'll just be accepted. Once it reaches that target level, it'll just be accepted. And maybe it'll reach it before the end of the year. Who knows? And then they'll be saying Bitcoin's going to be going up to 250,000 when we're at 100,000. It'll be the same old thing that's happening right now. And I'll probably be on here when Bitcoin's 100,000. I'll probably be on here telling you guys, hey, investors are saying it's going to go to 250. So this is going to get tougher, not easier, for the people out there who invested early, and are holding the Bitcoin, because where do you know when to get out? And what are you getting out into? You're getting out into a dollar that at that point might be free falling. And of course, you got to understand that your Bitcoin is going to be accepted at more and more places, the higher prices it gets. And as it gets to be a higher and higher price, it's going to become more and more stable at these higher prices. The higher the price goes on Bitcoin, the more it's going to be, there's going to be less volatility, less big ups and downs in price. It's going to be more stable the higher it gets. And there's a lot of people out there who make the argument. They say, hey, Bitcoin is only 7 transactions per second and it consumes all of this power and everything else. What they're not realizing is what Bitcoin's going to be used for in the financial system of the future. It's going to not be moved. You're going to see the transaction volume on Bitcoin when it really gets into these high prices, 200,000, 300,000, 400,000. You're going to see the transaction volume actually fall. It'll be moved less across the internet. Now these other coins, these altcoins, they're going to be moving more across the internet. And they need the high volume transaction volumes of maybe a 10,000 transactions a second or whatever. They need that because they're going to be used for transactions more. Bitcoin's just going to sit there. I mean, how many times has gold moved around in the financial system? It just sits there in the vaults. Bitcoin is the electronic equivalency. It's just going to sit there in wallets. As the price stabilizes higher and higher and higher, it's going to be moved less and less and less. And as far as the mining is concerned and the amount of electricity it takes, well, that's just going to continue, and it's probably going to increase. And we already see Bitcoin using as much power as, say, the state of Georgia, the whole state of Georgia right now. Well, it'll use as much power then as the whole state of Georgia and the whole state of Florida combined. It'll just keep moving, chugging along, bigger and bigger, unless something comes along and completely breaks Bitcoin. And it's getting harder and harder to do as the network gets bigger and bigger, because the only thing that can really take Bitcoin down is something called a 51% attack. And right now, to perform a 51% attack would take the equivalent probably of like the state of Georgia, the power consumed by a whole state, right? Well, as we move into the future, it'll take 2 states of Georgia. It's going to be more difficult to launch a 51% attack than it is now. You know, I mean, back when the Bitcoin network was first starting, and it was only small, it would only taken a small amount of electricity to launch a 51% attack. Back, if you went back to, say, 2010, you know. So this thing's advancing forward, and we're going to reach a climatic period at a certain point. But is that climatic period where Bitcoin finally peaks off? Has it absorbed all of the value of most everything in the world at that point? This is where I think it's actually headed. Thank you guys for listening. Like and subscribe. Give me a thumbs up, and we'll catch you guys in the very next show. Bye-bye.